Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can notice is that we have a market which at the moment is testing a very strong area of resistance. From here, all this previous rejection to the downside was created, and at the moment, as we're testing this exact same zone, which is still acting as resistance, we could expect some short-term bearish price action to be developed away from this area. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how we did have the creation of this W formation. And in general, after the creation of a W, what you would expect is a potential rejection to the downside for the market to go and complete the pattern at the previous resistance turn support. So here on the weekly, some short-term bearish price action could be expected for the market to go and complete the pattern at this previous resistance turn support. We can also notice how, in general, if you have an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse, which gives us a 0.32 Fibonacci retracement, which is the first Fibonacci level to which you would expect a retracement, which is also lining up with the previous resistance turn support, which is also the neckline of the W formation, which creates confluence of support at this level, which should attract this market to the downside. At the same time, we must also notice how the market is currently entering inside of an area in which we do have a very strong supply from a weekly perspective. From here, in fact, all this previous move to the downside was created, and at the moment the market is testing this exact same zone, which is still acting as supply, from which short-term bearish price action could be created. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we must notice is that we have a market which at the moment is bounded in between support and resistance. Now, until the market will remain bounded in between this resistance and support, we cannot really expect anything else rather than horizontal price action to be created. However, if we do get a break to the upside or to the downside, things would definitely be interesting. Now, I did speak about USDJPY a few times in the past. I spoke about it after this impulse and correction. From here, I wanted to see the move to the upside. I made a full breakdown explaining all the reasons for which this move to the upside was expected. Then again, we had the impulse correction. I made another breakdown explaining all the reasons for which more bullish price action could be expected once again. And by the way, I will link these previous analysis in the description, so you can go and check them out for more free education. However, as we have a market which is currently bounded, we cannot really be looking for anything, at least at the moment, from a daily perspective. But before we continue further with our analysis, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, if we check the data for the JPY, what we can see is that lately it has been increasing. We went from having minus 46k net positions all the way up to minus 20k net positions. This shows how the institutional side of the market is shifting to the bullish side, with a massive amount of, if we look at the shorts, getting decreased. We went from 140k all the way down to 42k short positions. So institutions are closing their shorts on the JPY, which is making the JPY stronger, which is also the reason for which we have seen this massive move to the downside. So in a situation like this, if we will see the market break above this high, at that point, a little bit more bullish price action could be expected. But that would simply mean a deeper test of this supply zone that we have identified on the weekly, from which then a rejection to the downside seems a possibility. So if the market breaks above this high, at least at the moment, there isn't anything interesting. However, if the market here would manage to break below the support, we don't know if In fact, actually at the moment it seems like we will actually break to the upside. But if we do manage to break to the downside, at that point, things would be quite interesting because the monthly, weekly, and daily, and also the COT data would all be aligned for a potential rejection to the downside, essentially for the market to complete this impulse correction and impulse pattern to the downside, also completing the weekly W formation that we have identified at the beginning of the video. So if the market actually does break below the support after the break on the retest of this previous support and resistance, how we could be approaching a potential rejection to the downside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the downside for the market to complete the W formation that we have identified from a weekly perspective. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I definitely suggest that you go and check out the TransparentFX website at transparentfxtrading.com. Here you have the possibility to get access to my entire course. In fact, as soon as you enter the website, you will see that I have a complete video breaking down exactly what you get in the all-inclusive mentorship program. You will see that you have the possibility to get access to all the courses, so risk management, day trading, swing trading, scalping, position trading, one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface, the account funding program, in which essentially we give you a complete scholarship in which we pay for you to apply for any challenge that you want to any brokerage after you have graduated. And if you continue to scroll down, you will see that you have the possibility to join directly here from the website to start your application and become a student here. So I really suggest that you go at least to check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.